What's up, mortgage coach community? I am sitting down with Grant Clinton for the first time. Grant is out of Houston, Texas. He is a mortgage coach, grandmaster, has done over 1,000 total cost analysis, and he specializes in working with builders. So welcome to the mortgage coach community, Grant.
Thank you. Hello.
Good to have you, man. So if you could let's just start with how are you doing right now in today's market? You know, it is the second day in September. How is August, and how do you think you're going to do for the year?
Yeah, August was great. We just finished up about 7.5 million in August. I think it was ended up being about 18 units. So super strong right now. I do a lot of builder business. So even though we're in a dip right now, some apps are a little bit slower and so forth. I'm now closing deals that I literally apped 9 or 12 months ago. So, we're going through that. Yeah, hope to finish up the year. It's gonna be a little bit further off than last year. Last year we finished about 75 million. Hope to maybe end up about 65 million or so this year.
Well, hey, that is absolutely winning in this market. The market is down 50%. I talked to a lot of top producers that are down 40%, up to 60%, and I don't even think you're down 20%. So I think you're gaining market share and you're winning. So congrats.
Yeah, thanks.
So let's just break it down. Like, what are you doing to win with builders right now? Like, what is it that you're doing that's adding value?
Yeah, so I act as a preferred lender for a couple builders, and then I act as a second look lender for some others. We just happen to have here at Prime Lending, we have a pretty good wide product mix. So not only can I do the regular A-paper stuff, but we've got a product mix that allows me to do some things that the in-house lenders can't do for the ones that I'm a second look. But I do mortgage coach for literally every single client. I use it kind of like an outline, to tell you the truth. My memory is not great, so I'll sometimes lose myself in my own head, in my own conversation sometimes. So by having a mortgage coach presentation as just part of my normal day-to-day when I'm meeting with clients, it just helps me keep on track. And I even show my mortgage coach presentations to builders. That's really one of the ways that I win builder accounts, is by showing sales consultants that are in model homes or whatever, or the division presidents for different builders, this is what I'm going to be doing for your clients. And not by any means bashing on any preferred lenders for in-house lenders for builders, because I was there for 10 years. But a lot of times it's just a volume game. You're doing numbers, and clients aren't spending a whole lot of time with their loan officers, especially loan officers really educating them and showing them multiple different products at different interest rates, buy downs, and so forth. So I tell them, hey, if your in-house people can't do it, if I'm a second look lender, I'll say, hey, I'm going to be meeting with your people face to face. We're going to be building relationships. I'm going to be, showing them multiple options, graphs, short-term, long-term benefits, and they're just wowed. A lot of times they're just wowed. They've never seen it before.
So this is part of your process that helps you be either a preferred or secondary lender for a builder, and then you're doing it with every client. How do you frame it to the builder? Like, why do they care that you're doing this? How do you position in a way that's valuable to the builder?
I think just the time investment that I have with my clients. I have my team set up where once I've gotten somebody pre-approved, which my team will usually do the pre-approval, then they'll set up a meeting and I'll do a TCA with my clients, and I'm spending valuable time educating their customers. And I tell them, my goal is to have the client come back to you and thank you for recommending me. And by showing something that's outside the box, like Mortgage Coach, showing them, and they're actually even showing their sales consultants, why somebody that was hot, 8 months ago, it's now gone cold, why they should maybe follow up with that client and say, hey, we should buy right now, because I'll use like a rent versus own analysis, saying, hey, these homes are appreciating at 10 or 15%. I mean, yeah, if they're going to be waiting for a low rate to come back, maybe they save, a few $1,000s on interest, but you're sitting on all this net worth of equity that you'd have as a homeowner. So I'm trying to do a value add by giving information to sales consultants how they can go back out and win clients that they've lost.
So just make sure everybody heard this. I think it's important. And I know a lot of mortgage coaches, when using the fact that they're a mortgage coach with realtors, it's about conversion. Like, hey, I am gonna improve conversion, and in this market, I'm gonna help get more buyers into escrow. So really, that's that. I'm gonna help get more buyers into escrow and help them gain clarity faster. So they're a better customer. They're either gonna be off the fence and out of your lead bucket because they've seen the numbers, or they're going to be off the fence making the offer needed to do a deal. Is that fair enough?
Right, I think that's fair for sure.
So let's get into a specific story in a case. You sent me a couple TCA'S. Which one do you want to do first? And I want you to kind of describe the story around it. And then, hey, this is the total cost analysis I did, and this is why I presented the numbers the way I did. And I'll show the screen as you're telling the story.
Okay, yeah, I've got a customer, it's a friend of mine from church actually, that they've been hunting for a house for about 5 or 6 months, and the market has cooled off a little bit, but still they've been searching for a while. So this is the one where I've got their payment, their desired payment was $1,850 a month, and they had about $23,000.
So this is not the rent versus.
That's not rent versus own. Yeah, it's gonna be another.
So
one.
is it this one right here?
Oh, that's small. Nope, not that one. Try one other one.
This one.
No, I think
Those are the three that you sent me. So
okay.
If you want to send me another one, I can click on it real quick.
Yeah, I can. Let me shoot that one over to you, brother.
Yeah, because I got 3 links from you. And stay tuned, guys. We're going to show that one. And the good news is we've got a few other strategies to show in just a second here.
Yeah, here we go. All right. Okay.
There we go. I got it. All right, I'm going to share my screen. And here is another TCA with 4 options, it looks like. Go ahead.
There we go. Yeah. So this is one, my friend's trying to buy this house, or a house, for some time now. They're capped out. They said, I can't do any more than $1,850 a month. And we've got 23,000 total max cash out we can do. So previously, a few months back, it was, they're A paper 800 credit score customers, but previously conventional all day long made sense. But now in the current market, conventional rates have gone up, and FHA, I'm able to get those lower. So what I did is I showed them the conventional loans with buy down, with and without buy down, or with more buy down, and then the FHA with more buy down, getting from 5.25 to 4.75. So in all of those scenarios, they're trying to get as much house as they can with that same payment and that same cash to close number. So this just pointed out that FHA gets them a $230,000 sales price when conventional gives them $215 buying power sales price. So that's kind of the point that I was trying to make in this one.
So this is by the way, I call this like a purchase power analysis, where they're looking at, how do we optimize our purchase power in this market? And I love what you did. I don't see a lot of these right now in this market. And I think I should be seeing more of these. I'm seeing more things that are just focused on, seller buy downs. How can I look at my monthly payment?
Right. Yeah. So this is a neat strategy for them. And again, it flipped. Again, if we looked at this 6 months ago, conventional would have been the better route and gotten them more buying power. So it's just interesting to see what the market's doing. And this is a good reflection of that.
Now, I liked this one a lot because it was a rent versus own. And I could see how this would really help first-time home buyers get off the fence and into escrow. How often are you doing something like this?
Yeah, so this is something that I showed to builders, actually. I also do it with customers, but I probably do about 60% of my builder business, and then about 40% is repeat customers from past clients, and realtors and financial advisors and so forth. So I'll do this with talking to salespeople at home builders, for those stale customers, those clients that went cold when they were talking to them in January and the rate was 3%, and now they're talking to them today and it'd be 5.5. So this basically just shows the client paying rent for just about the same monthly payment as they'd be doing on an FHA loan or a conventional loan. The paid in 60 months, the second graph is going to show basically that they've basically thrown into a black hole $164,000 versus the equity that they built in. Now the equity on this particular graph doesn't show the whole picture. So by going into the more info button on the rent versus principal paid.
This one right here.
Yep. This will show their total their total equity that they're going to have after 5 years, which is 130 or 132,000 versus zero as a renter. So this is super strong. That I mean, I'll share this with the sales consultant and say, hey, I'd love for you to send them to me to go into more detail with this, but this is kind of a tool that you can use to a reason to call that customer that went cold. Say, hey, I know you did this, but if with the homes appreciating at 10% per year, and you're looking at a $300,000 home, that's $30,000 worth of net worth you're going to have in 1 year. Versus if you're scared because the interest rate went up 2%, and yeah, maybe you're going to save $5,000 in interest if the rate were to go back down. If it were to go back down, then your delta is $25,000 net worth that you'd have in a year if homes appreciate at 10% when they appreciated at 20% last year. So I'm not even using the aggressive appreciation from the last 2 years.
Right. So guys, to check this out, in 5 years, we're talking $130,000 in equity. In 10 years, we're talking, almost $300,000 in increased net worth. And I would make the case here that every first-time home buyer, whether it's a builder referral, whether it's a realtor referral in this market, you need to help people see the big picture. The today's picture is not great. Rates have gone up 3% in a matter of months in the same year. That's not great news. But when you look at the big picture, the long-term value of building wealth with real estate, it really helps people make better decisions. And then I hear a lot of people doing different buy down options. I don't know if you'd rather talk about this one or this one.
Yeah, I think this one's probably a good buy down here.
Okay, yeah, tell us what's going on here. What's the story?
Yeah, so our FHA is the way they're priced right now. FHA, I can't remember if this 5.75 probably even has a little bit of points on there right now, just the way that the market's priced. But I'm showing pretty significant moves in rate here. So 5.75 to 5.25. Looks like over 5 years they're saving $5,000. And then going to the 4.25, it's a little bit more, a little bit better on the 5-year graph. In this particular situation, this customer went with the 5.25 because I always tell them average life of a loan is going to be about 4.5 years. That's how long somebody's going to keep a loan in most cases. So yeah, we can look at a 10-year, we can look at a 30-year outlook, but realistically, statistically, you are going to be holding on to this loan for about 5 years. So I always focus a lot on that savings over 60 months. And since those total savings was pretty close on the second and third option, I told them go ahead and keep a little bit more money in your pocket in this case, instead of going to the 4.99. It's not on sale as much as it was from 5.75 to 5.25.
Cool. Well, I want to get a couple scripts from you before we wrap it up. Anybody that's doing as well as you are in this market and using all the tools right. You've given over 1,000 TCA'S, total cost analysis. What do you say to the borrower before you give it to them so that when they get it, it has value and it has context? How do you describe it? And what is the way in which you position it to the consumer, the buyer?
Yeah. So one strategy that I do, again, not everybody does this, but I never send a TCA to somebody without them picking up the phone first. Okay. Because I don't, even though Mortgage Coach is great and it's, got all the colors and graphs and everything, if you just send over the TCA lots of times, you're still just going to be a number. Okay. So I prepare my Mortgage Coach in advance. My team will help me set up a conference or a face-to-face or a virtual meeting. And then when they pick up the phone, that's when I hit send. Okay. Because I want to go through this TCA with them, building relationship, building trust. And I say, hey, we're going to go through this. We're going to look at long-term. We're going to look at short-term benefits. We're going to look at cash to close. You're going to have, camp out. I say we're going to camp out a lot of times in the summary page because you got your rate, you got your cash to close, you got your graphs all in one place. But if we want to get into the nuts and bolts, if you're an engineer or you've got the analytical mind and so forth, and let's get into these, let's get into some of these graphs where we're going a deep dive into where this equity is coming from and so forth. And again, just spending 20 to 30 minutes with somebody. It could even be somebody that's bought 5 homes. Almost every time when I get off the phone with them, they're like, I've bought 5 homes and done 5 mortgages, and I've never had anybody spend time with me, never had anybody show me what you're showing me and the different loan scenarios and why I should look at an ARM product. I've always heard ARMs are bad. I hear ARMs are bad, but you're talking to me about this ARM. And yeah, I mean, if people are keeping a loan for 5 years on average, and you're giving me a 7-year ARM and the rate's 0.75% lower, why wouldn't I do that? And they're thankful. And again, they go back to that realtor. Thank you, Mr. Realtor or Mrs. Realtor, for sending me to Grant because he taught me something that I didn't know before. And that's again what I tell my realtors or referral partners. I want people to come back and thank you for recommending me. And I use Mortgage Coach as a big tool. It's a big part of it.
So I've asked that question a lot, and I've heard that before, that he send the link as you get the client on the phone. I've also heard they send it a minute before, and I've also Jeremy Forcier, he just creates it, sends it, and then sometimes in the video he's like, hey, tell me which option, and then many times he gets them on the phone and then he walks them through it. So I don't think there's a single right answer, but here's what I will say: whatever you do it consistently. Make sure that because here's the deal: when you have a consistent way in which you deliver advice to a consumer, you get great at it. Like if you're only doing this,
become a professional at that, right?
Yeah, you just get good because your team knows how you roll. You're consistent. You've got a process, and you're doing it consistently. So I love that. So before we wrap, I want to get another script because you're armed with both Mortgage Coach presentations and Sales Boomerang signals and alerts.
Right.
I would love to know, and it sounds like you're pretty serious about your database. You want to lose as few people as possible.
Right.
What are you saying when you call those Sales Boomerang alerts, and how is that helping you in the market?
Yeah, absolutely. So I have a text phrase that I've got saved in my phone. So I'll see Boomerang pop up. Sometimes it's one of the clients that are active clients. And if there's an active client and I see that they've had a mortgage inquiry, then I'm definitely on the horn first. I'm not texting that customer. But if I see 3 or 4 or 5 boomerangs come across per day, usually I'll put together a message thread, text, and I'll customize it once I get in there. But I'll usually say, hey, I understand that a mortgage company I was just alerted that a mortgage company just pulled your credit. I want to make sure that this is not a fraudulent transaction. If it is a true transaction, I hope you'll consider me and let me put together some figures for you. And then usually they'll respond. If I don't get a response at all, lots of times I'm moving on. That's probably on me for not doing the follow-up that I need to. But at least it's something that I wouldn't have done before. And a lot of times, I would say 50% of the times, they're responding back saying, oh yeah, we did this, we're doing this here. And sometimes it's something that I can do. Sometimes it's something else. But it is definitely opening up conversations. And it triggers me when people are shopping me as well. If they're, especially whenever, maybe I locked them at a rate on a 9 months ago or 6 months ago on a rate, and rates have gone down and they're on a long-term lock and they're starting to get a little bit sketchy because rates have dropped. That's an opportunity for me to come in and remind them, hey, by the way, we got a float down option in case just thought I'd give you a call. But it's a good trigger, and it's usually helped me with my retention.
Cool. And so what percentage do you think you save, where you're saying?
I would say on Boomerang for active accounts, active files, because again, I've got a backlog that goes out about 14 months because I'm on builder deals. So I would say greater than 50%, because I know what they're doing whenever they've got an inquiry, and I know what the market was whenever we first talked versus what it is now. So I automatically create my script in my mind before I call them, because I pretty much know, why they're looking around.
So guys, I've been interviewing some of the most successful loan officers in the country at how are they using signals, alerts, and insights in their database to call clients. And the most defensive alert is the credit inquiry, where hey, they're shopping. That's got the lowest conversion, but there's all kinds of alerts in Boomerang, and the most important thing is to call them. When I interviewed Myron Chamberlain, he does a lot of alerts at your company. You guys are going to be on my panel together in a couple of weeks. And one of the things I took away from him is every morning between 8 and 9, he's calling Boomerang alerts. So it was like, he picked this habit, and this habit is picking his success levels because he does it consistently between 8 and 9. I'm calling all the signals and alerts in my database. With that said, do you have any specific time that you do these more often than others, or is it just when the alert comes, you hit it?
No, yeah, it's immediate. I try to hit it immediately because I think the Boomerang alert comes within 24 hours of when that inquiry happens, if I remember correctly. So I'm trying to be the first one to get there because I know there's probably others that have been alerted as well. With the bureaus that sell that information when a mortgage credit inquiry is out there. So I'm trying to be the first one out there. But yeah, if I'm not out in the field, which I'm out in the field a lot, but when I am, I'm very close to my phone, close to my messages that are coming in, and I can do my text thread that's already pre-worked, and I can just plug in a name, and it's a pretty good little trick. It's honest, it's genuine, because I am asking, hey, was this a fraudulent inquiry? And usually it's not, but you may help them if maybe there was a fraudulent inquiry out there.
Well, I'm going to get some more scripts for you. So down below, guys, there'll be a link to what are some of the best scripts. And just like how he's sending the alert once he has a person on the phone there, I don't think there's a best. The best is that you do it consistently, but there's nuances, and I would push everybody to experiment with that. I'm going to put some other examples of scripts, and I would even recommend you try out some other scripts. So we are going to wrap this up. If you guys have questions, put them down below. I'm going to have links to Grant's TCA'S down below. So stay tuned on those. And Grant, I'll see you a couple weeks in Dallas, Texas.
Sounds good. Thanks for the opportunity.
Appreciate you, brother.
Bye.
Share this with your friends. If you liked it, give it a like down below. And this call is a wrap. Take care, everybody.